Today, let's talk about why you need books and financials. Good books and records allow you to get an unemotional view of the business, to ensure that it's meeting your expectations as the business owner. Often business owners will be so busy with the day-to-day grind that they'll judge the business performance and health on their gut instinct and whether or not there's money in the bank account. But depending on how big of a company you have, you may or may not even be paying the bills. So while you might have an idea of what's coming in the door, you have no clue what is going out. Imagine having a tool in your toolbox that would help you confirm or challenge your gut instincts, and also help you make more informed decisions. It would allow you to better understand the business and its health based on the numbers. Picture this. You're selling $1 million of product every month. You're on pace to be at $12 million in sales for the year. But you're so busy selling and doing your own marketing that you didn't realize that the cost of the battery you're having installed in your product has increased in price over the last 12 months and is now double what it was when you first launched. The increased price brings your cost of goods sold to $800,000 per month. And with $150,000 of monthly overhead expenses, you went from making $250,000 a month to making $50,000 a month. That's a pretty terrible deal. But guess what? The only reason you know that's a bad deal is because you can see it in front of you. If you're bringing in $1 million in sales per month without books and records, you're going to be feeling like you made a lot of money because on average you're getting a deposit of $33,000 per day. But you wouldn't be able to look up historical financials from 12 months ago and determine that your costs have increased by such a large amount that it's truly affecting your profits and the business's cash flow. You wouldn't know that either you should have found a different battery supplier months and months ago, or you should have increased the cost of your product to account for the increased cost to make it. Think of your financials as a scorecard for the business. They tell a story about the past and the present and allow you to better plan for the future. Keeping good books and records is the only way to ensure that your financials are accurate. And inevitably, when it comes time to prepare your taxes, you're going to want to have accurate and complete books and financials to help your tax preparer maximize your deductions while ensuring that you pay the least amount of taxes that you rightfully owe the government. I promise you that if you're giving your tax preparer a profit and loss written down on a piece of printer paper, you're paying too much in taxes because you're definitely missing deductions. Plus, should the IRS ever send you a letter to do a desk audit, it's going to be really embarrassing when they ask you for your books and records of the business and you have to give them a sheet of printer paper. Whether you take charge of the books and do it yourself or bring in a bookkeeper, which is always the preferable choice, to help you keep the books and records in order, make sure that you understand what the books are telling you and use those review periods to set goals, make changes, and become a better business owner. If you like this video and are interested in more topics like this for small business owners, check out the Business Starter Kit and Command Your Business at engagecpas.com/courses. We break down accounting and tax related topics in plain English for you. We talk about how you should pay yourself, how your entity is taxed, how much to save for taxes, tax myths, and so much more. Come check it out. The link is in the description.